Hey, what's up, guys? Houston here. Look, if you're looking to start your own business, okay, and you have horrible credit and it's making it a challenge for you to get startup funding, then I'm going to share with you 5 places I think you should try no matter what your credit score is, all right? Now, the first lender we're going to be talking about is Lendeska, okay? And they are freelance cash advance, as you can see here. Now, here's the thing about it. With these type of lenders, they are like merchant cash advances, okay? So the interest rate out of transparency is going to be very high. But as you can see, as a startup, you can borrow up to $20,000, all right? Now, and they offer these loan terms up to 18 months, and you can get it within less than 24 hours. And as you can see here, the interest rate's as low as 20%. Now, because it's a freelance cash advance, that means that you as a 1099 worker or self-employed, you can qualify for this. So what does that mean? Now, here's the criteria, right? You have to have annual revenue over 25,000. So basically, you have to be making between $1,200 to $1,500 a month, all right, in order to qualify for this loan. All right. Now, you 550 credit score. And here's the thing about it. I want to tell you guys about these type of lenders. When they do a credit check, they're not doing a hard on your personal credit. They're going to go to the third party credit bureaus, okay? So what I mean by third party, they're going to go to Clarity, which is owned by Experian, or they may go to DataX, which is owned by Equifax, or they may go through Factor Trust, which is owned by TransUnion, or sometimes they may check your LexisNexis, all right, to see if you're currently in a bankruptcy. They're checking to see if you may have taken out a loan with them in the past under a different company and you never paid back the loan. That's what they're actually looking for. They're not trying to disqualify you, but they are trying to find out, hey, what's going on with this individual and their company? Had they taken advantage of us in the past? All right. So you need to keep that in mind. And as you can see here, they just want you to be in business at least 90 days or more. Now, here's the thing about it. Some of their loans for first-time borrowers usually going to go up to 5,000. That's the reason they say a low credit score won't impact your credit. All right, so that's the reason they say that, because it's really not about the credit, it's about the revenue that's coming in. Now, one of the things I could tell you guys, if you're not a structured entity, you're leaving money on the table, because there's a lot of companies out here now. If you're a structured entity, they just go off the revenue from your bank statements to where they'll help you qualify for funding. All right, so just keep that in mind. Now, the next one is Yendo. Now, Yendo's been around a while, but here's the interesting thing about it. It's another one of these lenders anybody can qualify for. Anybody can qualify for. And the reason anybody can qualify for is that you are actually using your car as secured, as the security, right? So say that you have a paid off car with some equity in it, they would use that to give you a line of credit. Say that you even own a car and you're still making payments, but you have equity in that car, they would still give you a loan, okay? It has nothing to do with the credit. As a matter of fact, let's look at some of this FAQ so we can understand. It asks about building the credit. Yes, it helps build your credit. We report to Experian, TransUnion, and Equifax. So, in terms of helping you build your personal credit on the personal side when you pay back the loan, all right. And what will my line of credit be? So their line of credit goes from 450 up to 10,000. Now, like I said, for those of you that are serious about starting a business, you as a startup, but you have at least a vehicle with some equity in it, this is definitely one of those places you want to take a look at. All right. Now, can I get approved even if I have bad credit or no credit? And this is their own words. You can get approved as long as you meet Yendo's other approval criteria. Like I said, some of the basic criteria that they're actually looking for is you own a car with equity. Now, How does this work? Basically, if you own a car with equity, you would send in a copy of your title, or send in the title, right? And so they hold on to the title until you pay it back. Now, if you don't hold title and you're still making payments, then what they do, they have you take a picture of your bank statements and stuff like that. So to make sure that you are doing legitimate business, so it won't look like fraud, right? So it don't look like fraud to them. All right. Now here's a big one. If I miss a payment, do I lose my car? We will always work with you to try to establish a payment plan that works with your situation. So basically, they're not in the car repossession business, all right? They are really trying to help people get a loan. Of course, the interest rates is going to be high, but at the same, especially if you're trying to start your business and this is probably the only asset you have that can give you some leverage, then this is what it is, right? So they're not trying to, if you're a door dasher, of Uber, Lyft driver, whatever, they're not trying to own your cars. They're not there for that. They're actually there trying to help you, okay? Now, here's something else that you do need to understand that I think is going to be more helpful. Here's something that you need to understand. When they give you this line of credit, it's on a credit card, okay? And so what happens, say that you need a cash advance and stuff like that, they actually tell you, hey, this is our cash advance, 29.88. So yes, you can get a cash advance from your card, okay? So just keep that in mind that if you need the cash right away or whatever, yes, you can use use your card to get it from an ATM. All right. Now, another lender we want to take a look at is Fundo. Now, many of you all have heard me talk about Fundo. Now, the interesting thing about them, like I said, is because they offer merchant cash advance as well. And like I said, with merchant cash advance, the interest rates is higher. But as you can see here, look at that. They offer up to $10,000. Now, here's the minimum requirements and what type of people that they're willing to work with. So if you're in the freelance, small business, contractors, sellers, and franchises. Now, this is big on the sellers and franchises because you have a lot of people in this type of economy where whenever inflation kicks in, jobs laying off, so people turn to MLMs, right? And so with the MLMs and stuff, you may be bringing people in, and so they're starting to cut you a small check. But with SBA, they do not consider MLMs a legitimate business. However, this company Fundo, and I'll show you some others, if you have an MLM and you're making money or you're making money online or whatever, they will actually give you a loan. So some of the examples, as you can see here, is Etsy, Avon, Amway, Herbalife, Mary Kay, Monad. So if you're in an MLM and you're trying to find a loan, then this may be one of the better places to check. Now, here's the thing about it. They have three criterias, and as you can see here, the first criteria is having an active bank account to show proof that you are bringing in revenue. And so, in reference to the revenue, they're going to use Plaid or Decision Logic to check that bank account. All right. Now, here's something I'm gonna tell you guys as business owners, or you starting to start up your business, okay? Choosing the right bank. The reason that's important because all banks do not report to the business credit bureaus. And because they do not report all your transactions to the business credit bureaus, what you do, you end up missing out on opportunity to raise capital from other institutions. And another thing that messes you up and make you miss the opportunity from raising capital is because you may have a structured business, but you never put yourself on payroll. And so those are things that we actually can help show you the best banks to start with, as well as put you on, set yourself up on payroll. So not only are you able to get a new car under your business, but you're able to get loans for your business as you grow. Okay, so that's the reason why you should be a structured business, so you can get access to more capital. Also, say that you're trying to qualify for an apartment, and you don't have that proof. That's the reason you need the pay stubs, and by you having a structured business and you're actually able to issue pay stubs through your company, now you have legitimate documents to show that you can qualify for that apartment or that house. All right. Now, here's the thing about it: their minimum average monthly revenue, you can see here, it's only 1,500. Like I said, a lot of these companies, they're not expecting for you to be making a whole lot of money in order for them to help you. All right, so just keep that in mind. Now, you have to be in business at least 90 days, 3 months, okay? But here's something I want you to pay attention. Do I qualify? Because this is a big one. Now, in terms of qualifying, here, see California and New York, you do not qualify for this here lender, okay? And it's because of your state regulations, all right? But I want you to see something else. We do not consider your credit score. That's what I mean. These are startup business loans no matter what when it comes to the credit. So it's not about the credit. So just keep that in mind. When you're trying to get funding and stuff, you have to look at lenders that actually don't need your credit. They just want to show that you are active business. And again, like I said, if you can stomach the high interest rates temporarily to get you what you need and so to get back on your feet or to help grow your business, then hey, this is a viable option. And again, here reiterating, what if I had bad credit? Can I still qualify? So as long as you don't have an open bankruptcy, okay, your credit score doesn't impact your application. Now, again, open bankruptcy, how are they going to check the credit? We didn't discuss this. Like I said, they're going to look at LexisNexis to see if there's a bankruptcy there, or they may look at the other third-party credit bureaus, Clarity, DataX, Factor Trust, and they're looking for that bankruptcy. Most likely it's going to be LexisNexis, all right? So if you have your LexisNexis frozen and they try to look at it, then they may notify you, hey, you need to unlock your LexisNexis or whatever. But coming out of a bankruptcy, you're okay. But if you're in a bankruptcy, then that may stop you from getting qualified, all right? Now, our next lender we're going to be talking about is Giggle Finance. Now, as you can see here, and I've talked about this in other videos, Giggle Finance, $5,000. Okay, they give you $5,000. And in terms of who do they work with, who do they help? You know, they explain their product and features, simple application, funds in minutes, no credit requirements. Again, that's what we're looking for. Funding up to 5,000. That's what we're looking for in terms of what type of entities that qualify. As you can see, app-based freelancers, Uber, Lyft, rideshare, handyman, TaskRabbit, Care.com, truckers, beauty salons, right? So you're able to qualify for this. Now, here's another key. Say that like one of these institutions, you need to raise 15, 20,000, but one of them only gives you 10,000, and you still need to raise another 10,000. Again, you may have to go to these other separate institutions. Now, again, just keep in mind the interest rates is going to be much higher, but you're able to raise that type of money, that $20,000 with these other institutions. Now, how do I qualify? Again, we require at least 3 months in business to qualify. Again, you don't have to make a whole lot of money. You're just looking at maybe about from $1,200, $1,500 a month in order to start qualification of this. All right. So that's what you have to keep in mind. You don't have to make a whole lot of money. So it's not about the credit. Now, there's one other institution we're talking about, and that's Fair Credit. Now, here's the thing about it with Fair Credit. If you're familiar with NAV, and I have talked about them in the past, if you're familiar with NAV, where NAV will give you two trade lines, they will give you a unsecured charge card where they don't pull the credit and stuff like that. Well, this is the same as with Fairfigure, all right? And the thing about it, as you can see, they report to Credit Safe, Equifax, Experian. They use Plaid to check your bank account, TransUnion, and Small Business Financial Exchange. This is huge, especially with Small Business Financial Exchange. Because with Small Business Financial Exchange, now you're looking at so that you're trying to get an SBA loan, then this is like the gatekeeper of helping you qualify SBA loan. All right. So that's the reason why they're so important. And in terms of like small business financial exchange, what it is that like with American Express, you have PNC Bank, BMO, Truist, all of them report to small business financial exchange, and that information is picked up by Experian and Dun and Bradstreet. So that's the reason I tell you guys, don't focus too much on Dun and Bradstreet and having a paydex score and stuff like that. Getting real good qualified accounts is really what makes the difference. Now, here's the thing about it. They have a subscription. So with their monthly subscription, what it ends up doing, it gives you your business credit file, access to your business credit file, as well as your personal. So they'll give you your Vantage scores. Now, here's the thing about it. If you have a high Vantage score, there are lenders out there that will work with you, like Veridian and BCU, that I always talk about, because they use a Vantage 3 TransUnion, and usually you would look at your Credit Karma score in order to get that, but they actually give you this score as well. Okay, now here's the interesting thing about it: that subscription that you pay for monthly, it's reported to the business credit file, and if you're making between 2,000 minimum 2,000 to 2,500, then they also give you a credit card, a line of credit. Okay, and so their lines of credit usually go from 500 up to 500,000. All right, but it has nothing. Excuse me, as you can see here, it's 2,500 to or 250,000. So that's your income. All right, that's your income that you need to be making from 2,500 up to 250,000 in order to qualify. But it has nothing to do with your personal credit. Okay, so you don't have to worry about if you have bad personal credit. Like I said, these are loans no matter what. And what I mean by that, no matter what the credit score is. All right, so this is definitely, and like I said, you'll get two trade lines. So if you qualify for their loan that goes from, again, 500 up to $500,000, what ends up happening, that trade line reports on the business credit file as well as your monthly subscription. All right, now here's the thing about it, what people fail at, and I want you all to understand this. People will sign up for these programs and they may do a one and done. The thing about it, usually these type of programs, it takes them anywhere from 45 up to 60 days to report on your file. So if you do a one and done, and you're like, well, how come I don't see anything? Because you wasn't doing enough data processing for them to actually pick up the information to actually add it as a trade line. So you play yourself when you do that. So that's the reason I tell you guys, you have to be very careful in terms of when you're signing up for different programs, because if you don't utilize them, they're not going to report, and that's not going to help build up your business credit file. Now, here's an inside secret for some of you all that you need an understanding, that your business bank rate is more important. The reason is because the relationship you have with the bank, and it has to be the right bank. The weekly or daily deposits, if you're making those weekly, daily deposits, those have a bigger impact in terms of qualifying for funding, unsecured funding with just like even your EIN number. But you actually have to have that in place, and you have to actually utilize those accounts. All right, so if you have any other question about business credit funding, personal credit funding, removing negative items off the credit, click the link in the